This is the Progressive Dentist Podcast, where we help dentists like you improve your practice and teach you how to keep more of what you make. Here's your host, Craig Cody.
Hello, Craig Cody here with the Progressive Dentist Podcast. Our guest today is Tom Dunkel. Tom is the president of U.S. Mortgage Resolution. He has worked with high net worth investors since 2006 and has managed over $30 million of investments in alternative assets such as distressed mortgages, construction lending, rehabs, rentals, tax liens, multifamily real estate, and self-storage facilities. Prior to Tom's entrepreneurial career, Tom has worked as a financial analyst specializing in mergers and acquisitions in the aerospace, defense, software, and IT services industry. He's active with the Boy Scouts of America, mentoring Eagle Scouts, and he's backpacked over 350 miles at altitudes of up to 13,000 feet. Tom, glad to have you here today.
Thanks, Greg. Great to be with you.
How is everything?
Everything's fantastic. Feeling good. Business is good, so I'm looking forward to spending some time with you today.
Great. We're just getting into spring. Nice spring day out there today, so looking forward.
Yep.
So Tom, me and you, we go back a couple of years. So I know you've built a successful business, but even as successful as you've been, I know it's only part of your story. So can you start us off with some more context? Tell us about your path and journey, and then we'll dive in.
Yeah, sure. I guess I was always wanting to be an entrepreneur, always wanted to do something on my own, but I started out like a lot of folks just in corporate America. I had a good education and had some great opportunities in the corporate world as a financial analyst. Rose up to some vice president positions at some companies, and that was all looking good on paper, but I just felt like I could do more and wanted to break out on my own. So in 2006, April actually, my boss said something very interesting to me. He said, "You're fired." So that was kind of my catalyst to leaving the comfort of the corporate nest and heading out on my own. So my timing wasn't great, but I got into real estate at the time, 2006, right at the beginning of the collapse of that world.
Great timing.
Yeah. So, even though I definitely learned some lessons there, I guess they say if you either win or you learn. So I did a lot of learning during those first couple years, and which was great. As scary as it was for me, it felt very natural to be out on my own, and it was hiring people and handling lots of different things and learning about the market. And but with the real estate market not cooperating, I had to quickly find a new way to play the real estate game, because I really liked real estate and the whole real estate space. So I came across the idea of buying distressed mortgage loans, and this was in about 2009. And so I bought one and had some success, and bought another one, and next thing you know, I ran across Joe Downs, who's now been my business partner for going on 10 years. He had just come out of the commercial real estate industry, which had also been crushed by the downturn in the market. So he was looking to reinvent. So I said, "Hey, I'm buying these distressed mortgages. Why don't you check it out? Let me know what you think of it." And he came back to me, and I know this is a family program, Craig, so I'll leave out the expletives that he said, but he said, "I think you're friggin' crazy." And I said, "Well, I think there's a business here." So off we went, and we threw together a few dollars ourselves, bought some loans, had some success, shared that success with friends and family, raised some more money. And then fast forward to today, we're one of the largest players in the country in our niche of buying charged off distressed second mortgages as our primary business. We also buy distressed first mortgages, and we've dabbled with some commercial mortgages as well. But that's been a great run. And along the way, we've also done some investing in tax deeds and tax liens. We've invested in properties. We've made hard money loans to construction folks. And now we're looking at commercial real estate like multifamily and self-storage. And again, it just feels very natural to be out on my own. It took a while to get here, but we're in a pretty good spot right now, and looking forward to the future.
Well, that's great. Another overnight success.
Yeah, right. Yeah, exactly.
I love hearing that term.
It's a very, very, very long night.
Yes, exactly. So tell us about your business as it is today and what you guys do.
Sure. So we raise money from private investors, high net worth investors, and we use that capital to acquire pools of distressed mortgage paper from banks. So these are loans where the borrower, for a number of different reasons, has gone into default. The bank is not good at creatively working with borrowers to come up with repayment plans or discounted payoffs or what have you. So the loan sits on their books for a while until the regulators come around and tell the bank that they have to clean up their balance sheets. And so the bank will sell off those, what they call non-accrual loans, off into the world to companies like ours, which is under the Belrose Alternative Wealth Strategies. We have a few different silos. One of them is U.S. Mortgage Resolution. And so that's the company that buys these distressed mortgage portfolios. And then we have a number of different ways that we liquidate them. We can sell to other investors that we have developed around the country, or we can directly work out the loan through our servicing company with the borrower, whether that's a repayment plan, a loan modification, or a discounted settlement of some kind. And as those loan portfolios liquidate, we distribute proceeds back to our investors. And they've been pretty happy. They typically have come back when we've had a new portfolio to purchase, and they have typically increased their investment size and brought along their friends. So I think that's pretty good evidence that they're happy with our results.
Very, very interesting. So is this an investment where people can use their 401k or self-directed IRAs?
100%. Yes, we have investors that use their IRAs, and of course, high net worth investors are always looking for a good way to limit their tax exposure. So yes, we have investors that are using their self-directed IRAs to participate in these transactions.
Do you guys have any techniques that investors can use to kind of maybe keep them from getting into trouble with certain investments that are out there being hawked?
Yes, over the years, because we've not only looked at distressed mortgage debt, but tax lien certificates, multifamily, these other areas, we've developed a framework that we call the S.A.F.E investing method, S.A.F.E, and it gives us a framework that we can easily work through to evaluate these alternative investment opportunities, because unlike investing in stocks, bonds, or mutual funds, a lot of times there's not a fancy document that has all kinds of information in it. And so the due diligence is really up to the individual investor, and it can be very overwhelming, very daunting, especially for someone that has a full-time job, but they want to look at alternative investments.
Okay, great. So I'm going to flip it a little bit here. So can you tell us what is the most important thing you've learned along the way that's helped you build a successful business?
Yeah, that's a great question. I would say it really boils down to the people that you surround yourself with. In my first business, which I chalk up as a failure, but certainly a learning experience, as I was looking back on that, I realized that I did not have the best people around me. And that really impacted my results in a negative way. But now our business is doing quite well. And I believe that's in large part to the team that we have assembled.
Great. And who would that team consist of?
So it's myself and my business partner. We have similar but complementary skills, and I think that's important. You don't want to surround yourself with a bunch of people that are just like you, because you're not going to be able to evaluate these investment opportunities in the best way. In fact, I think having a nice mix of people makes sure that you have the all the angles covered and all the viewpoints covered. And then we have a director of operations, and she's responsible for running kind of the back office operations, if you will. So when we buy these loan portfolios, for example, we have these huge boxes of collateral that come in from the bank, and we need all of those organized. And so she directs all those activities, as well as our accounts payable and things along those lines. And she's great. She's been with us for 4 years and is an integral part of the team. And then we have our trading platform is run by a young guy who came to us out of, we actually found him while he was still in college, and he started interning for us. And, fast forward to today, and he's one of the sharpest minds in the country in our space. And he's way smarter than I am. Don't tell him I said that.
Well, that's good.
But that, I think, is key, to have people around you that are smarter than you, or have, a higher level of skills than you as the business owner, because, my job, as I see it, is to be the vision setter and the director and the cheerleader. And I need to surround myself with people that are smarter than me, that can do the individual tasks better than I can.
Yeah, and one of the things I think that you hit on that's really important is having different people looking at things and having different perspectives on things. And I think whether you're running a dental practice or any other business, having other people that can look at things and point things out to you is always a good thing, whether that's through a coaching program or a mastermind program. You see, sometimes we develop a little bit of tunnel vision. Just having an outside view or a different view is always a good thing.
Absolutely. Yeah, I was at an event just last night that was great. All different kinds of investors were there, alternative investors. So there were people that were in the apartment building space. One guy was in the he was in some coal technology. Another guy was in the distressed debt space, like I am, but bought a different kind of distressed debt. And so it's always good to get with those people and hear what's working, what's not working.
Yes, that's always good. So now be our mentor here, okay? Looking out back over what you've built, and what 1 or 2 strategies would you recommend to other business owners out there?
Yeah, so we've touched on a couple of them. I would say definitely building your team, and that's a super important one. And you need to make sure that your team is developing over time too, because it's easy for folks to just kind of get comfortable in their existing position. But to grow as a company, the people need to grow. And so we're always pushing for folks to, get more knowledgeable, go to the conferences, do the networking, so that they can stay on top of their games.
Yeah. I think investing in our team members and having them invest their time into learning is a really, really important part of running a business.
Definitely. And I would say, giving those people the ability to run with their ideas, and don't try to micromanage them. Trust them that they're going to come up with a good solution or a good result outcome. And if they don't, then everyone learns. But I think it's important to give them that runway, because it shows them that you trust them and that you want them to take that responsibility, and again, just grow as a person and as a professional.
Right. So, Tom, I know that you invest a lot in your personal development.
Mm-hmm.
So, do you have any time-saving tips or secrets that you think would be helpful to our listeners?
Well, I can share with you some of the things that I do and that seem to work for me. Number one is I use my calendar as a tool to keep me focused and on track. I plan out my week ahead of time as much as possible, and I block off on my calendar those times where I really want to focus in on getting things done. And for me, which I think is like most people, I'm most creative, most energetic, and able to focus the best in the morning. So really, by the time noontime rolls around, I've already accomplished my most important things for the day, and then I spend the rest of the day kind of handling problems or reacting or those kinds of things. I try to schedule conference calls later in the day and other kinds of things later in the day. So to me, that's been super helpful to my productivity and to focusing on my goals. And so, yeah, it's all about just tracking and writing things down and being able to say no to things. So, for example, if my phone rings and I don't know who the person is, I don't pick it up.
Right.
Because my time's too valuable to, have to pick up the phone, and who knows, maybe it's a telemarketer or something that's not relevant to what I'm working on at that particular moment. And so it's been a good practice for me to just not answer the phone. And if they do leave a message and it's something important, I'll get to it later.
Yeah, that makes a lot of sense. So, knowing you, I know that you spend a lot of time learning and mentoring from others. Are there any visions that you can share with us or things that you've learned from some of the mentors you've worked with?
Wow. Well, yeah, there's tons. I'm a big fan of Darren Hardy and Jim Rohn and Joel Osteen. They're probably my biggest influences. And the some of the things I've already been mentioning are part of Darren Hardy's Living Your Best Year Ever program, where you really start with being grateful for where you are at the moment and looking back over the past year and looking at your pictures and just having some gratitude for where you are and where you've been. And then that gives you the right mindset to start looking forward. And it's a great way to, again, you just get focused. So like Jim Collins says, if you're working on more than 3 things, you're not working on any. So this program helps to dial back all of the cool things that you have spinning around in your head. It helps you to pull out the top 3 things, and those are your banner goals for the year. And then you can break down those goals into quarterly, monthly, weekly, and actually daily activities. And that's been super helpful, and it's helped me get a lot more done because I feel like my time is very focused. And then that allows me to, go to my kids' ball games or, spend time with them or have some leisure time and not feel bad about it because I know that I've gotten my key things taken care of for the day.
Well, that's really good because that is really what it's all about, right?
Yes.
Being able to spend the time with family and friends and enjoy everything you've worked for.
Absolutely. Yeah.
So I really appreciate you taking the time to share your expertise and your insights. But before we close out and say goodbye, Do you have any additional advice to share with our listeners, or anything you think might be of interest to them that you can share with them?
Yeah, I'd love to. So I touched on it a bit earlier, which was our S.A.F.E method, and this is something that I've taught to folks that are looking to get into alternative investments, especially folks that are working and they might not have the time or they don't really know where to start. So I'd love to make this document available, Craig, to your listeners. It's a PDF document that's a few pages long, and it just it goes through our investing methodology. And I'll just give you the highlights real quick, if that's okay.
That would be great.
So SAFE stands for sponsor. S is for sponsor. A is for asset. F is for financials, and E is for exit. So at a very high level, S is for sponsor, and this is, who's running this deal that you're looking at. What's their track record? Are they reputable? Are they honest, genuine? Does their story make sense? So there's a whole list of questions that an investor who's evaluating an opportunity should run through when they're thinking about the sponsor. And the same for the asset. What is it that you're investing in? Are you investing in a property? Are you investing in a company? Are you investing in membership interests? So there's this gets into exactly understanding what are you investing in, and can you sleep at night knowing that your money is tied up in this investment? And that's kind of what it boils down to. And then F is for financials. So financials, I'm a financial analyst by training, so there's a bazillion different ratios you can look at, and forecasts you can run, and calculations you can make. But you also want to look at, is this investment, does it fit into my portfolio? In other words, do I have the capital available for this investment? Is it going to take up too much of my portfolio? It's an allocation and a diversification question. Do they have financial statements? What do they look like? Are they making money? Are they losing money? What are the tax implications of this investment? And again, the bottom line question when it comes to the financials is, of course, what returns are you going to make? But can you sleep at night with a solid understanding of the financial elements of this opportunity? And then E is for exit. How do you get out of this thing? How do you get paid back? When do you get paid back? Do you get your payments during the investment period, or just at the end, or maybe a little of both? And are you getting periodic statements, reports from the sponsor? So again, a lot of questions about how do you get out of this investment, and how much control does the sponsor have over the exit of this investment? The alternative investments are fantastic, and I've made a little bit of a career here in them, but it's not like you can log on to Schwab.com and click a couple buttons and you've sold your investment, you got your money back. That's one thing that investors have to be comfortable with and be able to sleep at night knowing that their money's tied up. And in a lot of cases, the exit is pretty clear, but sometimes the exit is not clear. And that all just needs to be evaluated as part of your due diligence process. And really, what I like about this methodology is, at any given point in time, if there's an answer that you don't like, or it doesn't feel right, or it doesn't sound right, you just stop and you go on to the next investment opportunity, because there are tons of them out there. And you should never feel pressured to invest in a deal. If a sponsor is putting pressure on you to say, hey, you need to get in this deal because it's closing next week, or, you just say, okay, well, thanks. Think about me for the next one, because you don't want to rush in before you've had a chance to thoroughly vet these opportunities, because you've worked hard for your money and you don't want to put yourself in jeopardy of losing that money by cutting corners here or there.
Very good. Very good. So Tom, what would be the best way for our audience to get this PDF? And also, what's the best way to connect with you?
Sure. I'd love to connect with your listeners, Craig. We have a special landing page where folks can find this S.A.F.E method presentation. And that, of course, be free to anyone who wants it. And that will be located at on the web at www.belroseam.com. That's B as in boy, ELROSEAM as in asset management.com/progressive dentist.
Thank you very much.
You got it. And
how else can I get in touch with you?
So I'm happy to chat anytime. My direct line is 484-498-8254, 484-498-8254. And we're outside of Philadelphia, Pennsylvania. So we're on the East Coast. For those that might be listening in Singapore, you never know.
Thank you for that. Thank you. Well, Tom, I really appreciate you being on, and we will definitely talk again soon.
Sounds great, Craig. Thank you so much. Appreciate it.
Thanks, Tom.
Thank you for tuning into this episode of the Progressive Dentist Podcast. We would greatly appreciate it if you left us a rating and review of the podcast so we can continue to help you and other dentists. Be sure to go to theprogressivedentist.com to learn more and make sure that you keep more of what you make.